Welcome back to the program. This is Capital Market and we're live on Channels Television. Now, demutualization is a major aspect of what the Oscar Onyema-led Nigerian Stock Exchange has put together strategies for the market recovery this year. He also hinged a lot of the factors or drivers for the market this year on the performance of the market, talking about the fiscal, the fiscal and monetary policies that are likely that he really wants to get harmonized. But basically, to give us his insight into what we are looking at this evening is the research analyst from Helix Securities, Mr. Korede Ologun. Thank you very much for coming through in Capital Market. You were at the briefing on Thursday, and how bullish are you on what Oscar Onyema reeled out as what he really wants to do to recover the market in 2017?
Well, the event was a forum for the management of the Nigerian Stock Exchange to tell the investing public and concerned stakeholders about the activities of the stock exchange. And the forum weighed in on activities of 2016 and gave a strategy outlook for 2017. Most of the talks centered around new product offerings, deepening the market, cross-border integration efforts, and then all of these things hinged on effective government policies and stable economy and things like that. The NSE is looking at introducing new products, looking at working closely with the government on 10-point fiscal agenda, work to raise finance for the mining sector, conclude the West African capital market integration, and as you mentioned, the demutualization process. The
demutualization. Let's get deep into the demutualization that you mentioned. He said consultation, stakeholders engagement was what they had last year, and it is expected that this year they'll take off from there. What are your expectations?
Well, apart from the demutualization being of global best practice, the SEC has come out to give guidelines on how the process should go. So it should be a process that should go very fast now, but we have to consider it from another perspective. Look at how that process is going to open up the industry in terms of competition, innovation, and all of that. Some companies have already positioned themselves for this demutualization process, such that once it hits the ground running, they come in and then they can take some power of the market. So what will be the question we should be asking is the NSE ready for this?
Yeah, talking about that readiness, the major concern in demutualizing the Nigerian Stock Exchange has always been the question of ownership. What do you make of that?
Well, the current structure, there are members that run it. So when they want to change the legal structure to shareholding, it shouldn't be a problem among them. They've been doing business among themselves. And then the guidelines are there to follow. So I believe they should just look at the guidelines and apportion, the shares among themselves and sell the rest of the public. It should be an easy fit.
Because we understand way back in the past when the stock exchange was set up or established, it was said that it belonged to government. So government is certainly going to have an interest in this. How do you think they should?
Well, the SEC, the NSE and the government, they all have a large role to play. And I believe the government is paying attention. The SEC has done its part. So it's left for the SEC to, the NSE to, sit back and do its own homework. The platform is ready for them to proceed.
Let's talk a bit about what Mr. Onyema said concerning global economy that the market seemingly depends on. Must we depend on FPIs?
Well, if we take a look at activities in 2016, 2016 was a bad year for this country and the capital market as well. Although the capital market didn't do as poorly as 2 years ago, in 2015 the market shared about 17.36%.
But then it was the third consecutive year of losses.
Exactly. That's in 2014 it was 16.14, but in 2016 it was just 6.17%, which I think is very fair. Part of the characteristics of 2016 was the introduced FX regime, which was a form of capital control. The FX regime lacked discipline and elasticity at a time when the government wasn't earning as much forex. FPI, as foreign portfolio investment flows, were largely subdued in 2016. About 19.7 billion naira average inflow in 2016 compared to 37 billion naira average inflow in 2015. So you see the large discrepancy because of the policies that actually played out in 2016. And then we had information inefficiencies that resulted in mispricing of stocks. The market actually played down good performance of companies, especially those that had hit a bump earlier in the year due to FX losses and increase in fixed costs. Business confidence was generally low at minus 29 in last quarter of 2016 compared to 8.3% up in 2015. Consumer confidence took the same downward trend. And when you look at all of this trend, the MPC and the fiscal arm, they missed an opportunity to have...
Which is an area that I was going to ask my next question on. You know, if we don't have this harmonization of these two entities of government, the fiscal authority, the fiscal policies, the monetary authorities, where do you think that will take the markets to?
Okay,
because Oscar really, hinges the success of the market this time on that.
We saw it play out in 2015, 2016. See, the MPC and the fiscal missed the opportunity to have reasonable effect on the economy when in December 2015, the MPC of the CBN moved to reduce rates to 11% to accommodate the huge spending of the 2016 budget, which was not passed until months later. The MPC had to hike the rates in March and July, to curb rising inflation, and has since maintained the rate at 14% to maintain its own sanity and integrity, although the fiscal arm has been calling for reduction in this rate. We might see another opening this year. Excessive borrowing will definitely continue. The budget deficit is larger, so there will be another opportunity for us to have something reasonable from the monetary and fiscal arm this year. We just have to be sure that they won't miss the opportunity like they did last time.
Okay, let's go to listings. It is expected that MedView will come listing in the first quarter. MTN will come listing with something called the green shoe and all that. So listings this year, are you optimistic that we will have more listings? I mean, as against last year when we had just one company initiates that listed just by introduction.
Well, even the Nigerian Stock Exchange mentioned that they're looking at just one potential listing for 2017, and they're also looking at listings from privatized state-owned entities. IPO right now is it's going to be really dull because there are too many uncertainties in the economy right now. So if we can have a clearer understanding of where our leaders are actually going and effective deployment of some certain resources, then we can start to, these companies have to factor in the fact that they have to make money. They are profit-oriented businesses. So when they'll be bringing their business to the stock exchange, they have to be sure that those kind of information inefficiencies and mispricing wouldn't occur and then, drive down their share price. So for now, I think if the stock exchange is able to get things right and the economy works in a way it should, then we might have IPOs, but I'm not bullish on IPOs for the year.
Okay, in terms of products, what kind of products are we likely to see more? Last year we had Vetiva, we had a couple of other ETFs floated in the market, but then again, because they track a lot of securities in the market, a lot of equity, NSE 30 and some other NSE Lotus Islamic Index, their performance was really in the right territory.
Well, that will take us to financial literacy once again. The investing community is not very aware of much of this product. So that is one of the things that the demutualization process will help us, achieve. When there is competition, enough information, we go out there and people are aware of the products. That if you have so many products and people are not subscribing to them, it's as good as you don't have products at all. So if these products are there and people are not buying into them, then there is a problem of information not getting into the right hands. So when we have demutualization and there's competition, people will strive, or involved parties will strive to get this information and the products in the faces of investors, and we would see more activities in those respects.
Corridor logo, Head of Research at Helix Securities. Thank you very much for honoring our invitation on Capital Market. We really appreciate it.
You're welcome.
Now, next week, the Debt Management Office, that's the DMO, will conduct its first primary market auctions of the new year. Now, the DMO will be reissuing 40 billion naira of July 2012 security, 50 billion naira of the January 2026, and 40 billion naira of the March 2036 instruments. What you have to do is to talk to your asset managers for details and have your deals profitable in the week. I'm Temple Ashaju, and right now it's a wrap on the program. I'll see you next time.